Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. How are we doing today? Happy Tuesday. Welcome back to the post Deep Seek day. We'll see what happens. I want to take a look at some earnings today. So it's Tuesday morning. We had Boeing, General Motors, Lockheed Martin, Royal Caribbean, RTX, JetBlue, Synchrony, Cisco, Kimberly-Clark. We can take a look and just see if there's any crazy reaction. RCL, Royal Caribbean, has been a beast, and it is again. This is a move that I would almost consider fading, which I don't want to sound stupid by saying I'm calling the top here, but we have a pretty ridiculous run that I don't know how much higher we go necessarily. But that'd better be a dumb trade, to be honest. So I like Royal Caribbean, but I want to see a pullback. So I don't know if this, tops out, fades out. We'll find out. But let's just take a look. So Boeing, BA, earnings popped on Boeing. So it's up to 186. General Motors, gapped lower. Lockheed Martin, that's LMT, pushed lower. Let's see here. I've got a 111 trade for March down to 219. Okay. I'll keep an eye on that one. Let me see. 425. I got to set a chart alarm at 425. There shouldn't be that much volatility on this trade. But I'll see if that's a gap fill on Lockheed Martin. Earnings wise, they missed on revenue by 1.29%, beat on EPS. Stock price down, but pretty well supported. I mean, it's down below the 200, which I don't love. But if we have some trend line support here, maybe bouncing, trying to get a gap fill. If we have like broader risk appetite, that would hopefully be a gap fill. I'll keep an eye on that one. RTX, that is RTX Corp, and busted up the new highs and then fading pretty hard with a red candle. We got JetBlue, down to 618. Son of a gun. These guys can't get their crap together. Good Lord. You got freaking UAL just killing it to the upside. You got Delta to the upside. You got LUV with earnings this week. Southwest has earnings on the 30th. Freaking JetBlue. Crazy. Anyway, I mean, it's pretty well supported right around this like $5 handle. They just can't break higher. Here is the weekly chart. I mean, we consolidated back in like 08, 09. It's like you'd think a stock that you could buy for the same price at 08 would be good, but it's also, why does it suck so bad that it's not any higher than it was in 2008? So I do have some shares of JetBlue, so that's why I can say that. I can hate on JetBlue stock. So I have, my break even's like $7. But I was looking to see if we had a range trade in here where we can go up and actually benefit like the other airlines are doing to making some fresh highs where maybe this gets into the teens and I take some profit. But anyway, that's JetBlue. Cisco this morning, that's food related. Wait, this is Cisco for computers, right? No, that's food. I was going to say Cisco food, and then there's CISCO for computers. $72. That one's pretty choppy. I don't know what the IV is on this one, but I would like maybe a strangle on that one would be okay if you want to allocate some extra capital to it. But you're probably going to get terrible premium for it. What else? Kimberly-Clark. Is it KMC? Nope. Kimberly-Clark, KMB. This is a lot of this is kind of like a Johnson & Johnson, Procter & Gamble type stock, trading at 132. Okay. More importantly is we got some earnings after market today. I would say the two I'm watching the closest would be Starbucks, which is trading around 99.55 with some good support around 73. I'll watch this one. I don't really have a trade on Starbucks right now. And then Chubb, I have some exposure on with a 111. It is, what's the ticker? CB. So we're at 274. We bounced nicely off the 50 moving average on Chubb. And I'm looking at this as a 111 trade. I collected $2 income. I am willing to own some of this down towards if I own it, it's going to be 208. We got a nice support level at 223. So doubtful that I would really take any ownership on this play. So let's see what happens with earnings. Hopefully, if it's Q4 related, then it's going to be pretty solid. We go into tomorrow. We have Progressive Insurance, which should be PG. Nope. What's Progressive? PGR. PGR. Trading at 244. If earnings are positive, then my little ratio spread should be fine. Let me go back to the daily time frame as well. Right there at that 200 moving average. So if it holds here and pushes higher on positive earnings, that'd be nice. If it pushes lower, I would be willing to own. One thing with insurance companies is they do a pretty good job filling gaps. So if we gap lower, we tend to fill that gap. But if we have positive earnings, this pops up and this ratio spread is likely going to be full profit. So that's tomorrow morning. I want to take a look at Tesla. Let's get into the big swingers here. So Tesla trading at 393. Likely going to have some powerful earnings. Let me see what the market makers say for Tesla. So TSLA. So the IV at 65.7, which is pretty high. We have earnings Wednesday after close. If we look at a Friday expiration on the 31st, market makers looking at about a $33 move for Friday. That doesn't seem like a lot to me, but I want to check and kind of price it all out. So let's go to Tesla. So average move is around 16%. I've got 9, 10, just I'll say 9, 11, 11, 11, 11, 11, 11, 12 and change, 13, 16 is the average. I would say that we could conservatively measure a Tesla earnings report around 10 to 11%. Okay, 10 to 11% seems fair. The stock is trading at 393, so 393.79 times 10%. You're looking at about a $39 move on earnings. Market makers showing about a $33 move on earnings. So I think the 10% is pretty fair. A way that I could trade this inexpensively would be the following. If I did let's see what it charges me if I did a 395 by 392 and I went out, let's say $30. So 395 to 425 and 392 to 62. So I paid $21 for a $33 expected move. So I mean, there is some profit potential in there. Okay, it's an expensive trade. I mean, I'm putting up $2,000 on the trade. That's my max loss. If Tesla has a big earnings report, one way or the other, and it goes beyond the expected move, then I've got a good chunk of profit potential here. If I go another strike, so I go like 22.50 or a 32.50, I get a little bit more profit potential here. If we have look, I'm measuring a move around $39. Okay, so if I can get a measured move of around 32, I mean, I take a decent chunk of premium. Now, I'm risking, and max loss would be if price doesn't go anywhere, then I'm risking $2,000. Like that's a pretty expensive trade. So for me, a more cost-effective way to trade this would be, okay, let's look at we're currently trading on 395. So if I go $30 and I do a 360 by 3, oops, what the heck happened there? If I do a 360 by 357, that's roughly a $35 move. Okay, that cost me 50 cents to make 250. That's a good trade. Okay, it's not the highest probability, but if we have more than an expected move, that's a very cheap debit for me to make some money. I can risk $50 to make $200. If I go $30 to $35 in the money here, let's go to the 425. If I buy the 425, I mean, I like this trade. I'm going to take this trade right here. It's going to cost me about $1. This is similar to what I did in Netflix last week, I think it was last week on Netflix. If price goes up $30, then I have enough to make $2.50 on the upside, and I would risk my 50 cents on the downside. Okay, if price goes down $30 to $35, and there's some follow through there, what I want to make sure before I take this trade is how many times do we at least get to 10% post earnings? And if I have to take this trade out to next Friday, I would probably take it to next Friday as well. Maybe it costs me a little bit more, but it shouldn't be too bad if I keep the spreads, 250. So let's see what we have for initial reaction. I'm looking to see how many times has price gone at least 10%. So That one checks the box. 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 We get to 12 after day 3. This one gets there after day 3. This one is right there at 9.99%. I mean, it's not there, but it's close. This one gets there. This one does not get there, and this one gets there. I mean, Tesla has a lot of good expected earnings where it goes to the expected earnings. Like if I'm trading a 10% move, it's done it, 8 out of the last 10 times. Like that's pretty good. So I like the trade. Now, I will say this, to be smarter and safer on the trade, I think I'm going to take the trade here. I might do 2 trades on Tesla. And the reason why is it's so little risk on this trade. I mean, I'm risking $100 to make. So if I lose on one side, I'm going to lose about 50 cents. Let me put this in yellow. So I lose about 50 cents. If I take a max loss, I'm losing 50 cents. If I win on one side, it costs me 50 cents. Okay. And I make $2.50. So that nets out to be $2 profit. And I lose 50 cents. So it means I can walk away with about $150 profit. I can lose on one, I can win on the other, and I walk away with $1.50 net profit per contract. That's not a bad trade. So I can make more in reward than risk and play this thing both ways. That makes sense? So I like that trade. Okay, now what I'm going to consider on Tesla is I'll give it enough time for this week and for next week to play earnings and post earnings. So I'm going to try to get into this trade for $1. Okay, let me see if I can get this trade in for $1. So $1, $4, $5. Hopefully I get filled at $1.05 in the mid price. Come on. $6. I'll go a little bit higher than the mid. $7. $8. All right, just got filled on that trade for $8. Okay, now I'm going to do something very similar to that going out to next Friday and try to do the same thing with partial profit. So this one is more similar to Netflix where, I could probably close this trade out for like $2.40, $2.45. If we're way beyond 427 by Friday or way beyond the 360 by Friday, this is an easy trade for almost max profit. Okay, but I'm going to go out to next week, the 7th, and do a similar trade. I still get 250 spreads. Now we're looking at about a $40 move. I'm still going to look to sell or do my debit spreads $30 or $35 out of the money. So we're trading around 395 again. If I go to the 4, okay, so it cost me a little bit more to go out to next week. And that's because the market makers are planning on about a $41 move. So I'm still going to say that it's going to be post earnings. Maybe there's some follow through. Let's go 35. So that would be from 94 to roughly 30. So right there, now it cost me 50 cents. So 50 to 55 cents debit on the call side. And then from 95 down to 60, it cost me a little bit more. Okay, but I can still make more in reward than risk on this trade, and we'll look to see if there's any follow through. Worst case scenario would be that price goes in the middle. So the most I can lose is, what I paid for the trade. Now, this one might be better for me to close out for partial profit. If I get a winner for this Friday and a partial winner for next Friday, I'm just going to take the profit. So I'm going to try to take this trade for hopefully less than $1.20. Let's try to go $1.15 on this trade. $1.15 debit per contract, and then worst case would be up to $1.20. If it's over $1.20, I'm probably not going to take the trade. Let's see if I can get filled for $1.15. $1.15 not filling. Let's try to go up to $1.19. $1.20 final offer. If it doesn't take, I'm not going to take the trade. All right, got filled at $1.20. All right, so I'm in 2 trades on Tesla. Let's put this in. This is going to be A1 trading. I'm going to post this in for my tab for stocks and options. So new trade. So I'm gonna get all these posted in one spot. So Tesla is going to be a 1/31 expiration and also a 2/7 expiration. So the 1/31 is a buy 425 call. And the sell 427.50 call. Buy the 360 put. and the sell 357.50 put. That one I got in for a dollar. The 425 by 427.50, the 360. Okay, that one I got in for a $1.08. $1.08 debit. And then it'd be a 250 max credit. Okay, 2.7 expiration would be a Tesla trade again. Tesla 2.7, buying the 430 and selling the 432.50. The put side, buying the 360 and selling the 357.50 put. And that one I got in for a $1.20 debit. 250 max credit. Okay, give me a second to finalize that post. And then on the stock itself, it's probably easier if I just open up another chart here. Let me go open layout, unnamed. That shall remain nameless. All right, 393. So what I need price to do is get above, and I'll put it just trend line here. I need price to get above 427.50. So price is above 427.50. Oops. Actually, I'll just box it in. That'll be a little bit easier. So 427.50 is right in here. And to the downside, 357.50. There. Change this to yeller. So greater than 427.50 and less than 357.50. Okay, so if price is above it or below it through earnings, then there's easy profit on this trade. If not, price stays in the middle, then that's my risk. All right, so that trade is posted. Okay, in for some Tesla. Next up on earnings, we have, where's my screenshot? Ah, darn it. Let me just copy that screenshot again so I can keep it handy. There it is. Okay, Tesla is Wednesday after close. Let's go to Meta. Meta is sitting at all-time highs. You know, I'm as curious as everyone. Like, is it limited upside? Not necessarily. I mean, we could have like a big blowout move and Meta's just crushing it like they always do typically and have some pretty good earnings. The only time they really had this big downturn was, you know, we had a bear market in 2022. Tech was getting crushed. They also were overspending for, I mean, investors thought they were overspending in the metaverse. And boy, did that come back in a big way. I mean, isn't that nuts? Meta was down to $92 and it's back up to $600. That's insane, man. Anyway, here we are at all-time highs. I still think there is some wiggle room to the downside. I mean, we could kind of top out here and certainly push back down to these moving averages. This also has a crazy high bar count. So I would not be super shocked if, I mean, and it may not necessarily be earnings, but it's like I would still see the technical side of Meta not necessarily going super, super high without having a nasty pullback. Or we just have like, you know, sideways or starts to work its way lower. Look, one bad earnings report, this thing will find that 200 moving average easy. So anyway, point is, I'm going to look at Meta and price it out. We have a 49.5 IV rank. Earnings is Wednesday after close. Come into my options history here. Let's go into Meta. I actually have both of those. For somebody's asking about the ETFs on China, Brazil, and Argentina. I trade Brazil. I have some shares in already, and Argentina I'm waiting for. I'm waiting for a pullback on. It's what is it? ARGT. I'm waiting for a pullback. I want to see it pull back into like the 144 200 moving average. But EWZ for Brazil, I already have some exposure on that one. We're bouncing up here. That's a commodity play, which is why I have some EWZ. So I do own some shares. And then ARGT, I'm waiting to pull back. China, I've just got stock exposure in China. I've got Alibaba, Baidu, and JD. I traded KWeb. I traded FXI. I'm out of those right now. I'm looking for a little bit more upside, and hopefully we'll get it. All right, let me price out some Meta. I'm going to price out Meta Microsoft for today. So Meta at 663. Market makers saying that by Friday we're going to have about a $47 move. Let's look and see what the earnings shows us. 13.74 average move. We got 15, 20, 20, 19, 19, 15, 13, 13. I think that's pretty safe. I'm going to go conservatively 13.5%. 13.5% times current price 663. Looking at about a $90 move. Wow. Market makers say 47. Earnings history says 90. Okay, well, that gives me something to work with. We're trading at 663. Let's see what it costs me if I go like $50 in the money. Or I guess $50 out of the money. So 47. If we go 662, that'd be down to like 610. So if I go 610, that's dirt cheap. All right, now before I price this one out, how many times did we actually hit 13%? So for me to confidently take this trade, I think 13% is pretty conservative. So how many times do we actually hit 13% post earnings? This might be the deal breaker. So post earnings, I like to go up to 8 days. I need 13%. Didn't get there, didn't get there, didn't get there, didn't get there, didn't. Very typical of earnings, 5 out of 10, 5 out of 10. So Meta seems more like a coin flip. So I think what I'll end up doing is, if anything, I might just not take the trade, or market makers say 47. Let's see if we have. Let's just do the exact number. 662 and 40 would put me around 620. So I'm going to do a 622. Okay, this is probably going to be like a 1-to-1 trade. If I do a 622.50 by 620 bear put spread, and then I do another 40, like $40 here, then I go to 700. I'll buy the 700 and sell the 702. So for a $1.27, it's about a 1-to-1 trade. So if we do have a more than expected earnings by Friday, that I could see, a lot of money get thrown at it. This is after the Fed as well. It's cheap. I'll throw it. I'll throw it out there. I mean, it's $1. Let me see if I can get in for like a $1.25. So that would be, I can lose one side, win one side, still walk away with $1.25 per contract. I might have to, if it's over $1.30, I'm probably not going to take this trade. All right, let me let that hang out for the day and see if that actually fills in the next 10, 15 minutes. By the way, I have a hard stop at the top of the hour. I've got another webinar at 11 o'clock. But I'm going to look at Meta. If it gets filled, I'll post this trade. If it doesn't get filled, then I'm just going to wait. So I've got it mechanically right now sitting around $40 above current price and $40 below current price. So it's not a bad trade. I just don't want to pay too much more than $1.30 for it. Let's see. I would think there's more potential risk to the downside if there's a miss in earnings, but Meta's just been killing it lately. Plus in the AI stuff, they're probably positioned for AI gains as well. But anyway, I'll see if I get filled. Okay, that's Meta. Let me price out Microsoft. So Meta, let me see if I can get. I'll try 131. I'll try to penny my way up there. 131, 132. I guess I'm willing to take up to like 135, 133. All right, got filled for $1.33. I'll take that trade. So Meta's coming in hot. So this is another new trade. Meta, 131 expiration. And this is a buy 700 call and then sell the 702.50 call. Buy the 622.50 put. Sell the 600 put, or 620. $1.33 debit and $2.50 max credit. And then for the image here, Meta, I need price to be above 702. So I'll box this in. So for above 702, there's profit potential there. For below 620, profit potential there. So either greater than or less than 620. Okay, so save that. And it's posted in Pulver alerts. There it is. And last one for today for me, Microsoft has been all over the place. So this one to me doesn't look like a stock that's going to necessarily be gangbusters higher or lower. Doesn't mean that it can't be, but man, something tells me that my favorite trade would be just to sell like a big fat iron condor on this thing. I don't know if that's the play though. You're going to collect way less premium. The out of the money debit spreads are just really simple because it's cost effective and you can lose on one side, win on the other side, and essentially it's a one to. I like it obviously when you can get a little bit more reward than risk. But Microsoft, let me just see what the numbers are. Okay, so Microsoft, we're expecting by Friday about a never mind. Premium is going to be, I mean, for only like an $18 move and we're getting 250 strike differences, I don't think there's enough precision in this trade to take it. If I go into the expected moves as well, let's go MSFT. So we're looking at about a 3% move. I mean, crying out loud. It's been consistent, but I mean, 3.71, that's just nothing. So 0.0371 times 440 price. Looking at about a $16 move. Market makers show about a $17 move. I mean, in a way, it's like, okay, well, could we sell premium? Is there any way I could sell like a 470 or a 386? Probably not, but I'm going to look at it. So Microsoft, coming to the options chain, earnings on Thursday. I doubt the premium is going to be anything the way I want it to be. If I looked at like a 470, that'd be a call fly. So butterfly, long call fly. And what's that high price? High price around 470. Very doubtful I'm going to get the positioning that I want. So 470, if I pin it there, yuck. It's like, is it possible? I mean, I can pin it there. That's way outside the expected move. We'd have to have a huge move to the upside to hit all-time highs. 470 would be my pin price. Like, I don't mind taking on this trade. I mean, I could still get this is the good side, right? Probability of this trade is 90%, which is not bad. So I got a 90% chance of profit. I'm only making 25 cents a contract, which is not awesome. But I do have a profit trap where it would be a trade that looks like this. So I can pull in 25 cents. I can max this thing out around $2.50. So that gives me $2.70 max profit on a trap. And then my risk would be if we're beyond 477 or so, then there's risk in the trade. And there's about a 7% chance of going to that move right now based on current price. Anything is possible. It's not an awful trade. I'm gonna take it. It's cheap enough that if I win on the trade, I still make $25. but it's a profit trap potential, so I'm going to take this trade. So 25-cent credit on the trade for a broken wing. Max risk is about 475, but the buying power is next to nothing. So I'll take the trade. Hopefully I can get filled at, let me see if I get filled at 30 cents. 30 cents. Not filling. Let's go down to let's try 28. I'm going slightly above the mid price. I'd be okay with 25 cents. It's obviously not that exciting. 25 cents not filling. Come on, bro. 24 below the mid price. 23. Okay, final offer 22. Naturally, it feels all right. I got filled at 23 cents. Definitely different trade. MSFT, new trade. MSFT, 131 expiration. It's a broken wing butterfly, so I'm doing a buy one call at 477. Oops, I'll do the other side. So 467.50. Sell two call at 470. And buy one call at 477.50. So it collected 23 cents credit. This one has a high probability of profit, a profit trap potential. So it's definitely not like an income trade. It's more like if we hit the all-time highs and I can trap that thing, I want the credit up front, so I'm not paying for the butterfly spread. And if I get a profit trap, it's basically offering like a 1-to-1 total trade if I can trap it. So we have profit trap potential at MSFT all-time highs. If price is sideways, down, nowhere, we keep the 23 cents credit per contract. Okay, so I need price to basically stay below this area. So profit below and trap at 470. That's my trade on Microsoft. Take a screenshot and I will wrap it up here in just a couple of minutes. So I'm going to get rid of that stuff on the bottom. Those are from previous trades. I've got those alerts already posted. Okay, and Microsoft can go into the mix. All right, so posting some earnings stuff for Pulver alerts. Posted. All right, Tesla, Microsoft, Meta trades are in. Anything else for earnings for the week? So I have now some trades running. I will highlight. Oops, wrong highlight. Let's try that again. Highlighter. There we go. Earnings on those three. IBM, I do want to take a look at this one. IBM has had a pretty good run lately. Maybe a popped upside all-time highs. Let's see what this does earnings wise. IBM, probably not a big one, but let's find out. 9%, not bad. So 8, 6, 5 and change, 4, 3, 4, 6, 8, 8. Average is 9.25. I would say it's less. The last 10 earnings report, we're probably getting like 5 or 6 on average. It's a $225 stock. So I'm just going to say 5%. 5% is conservative. So about $11 move, that's probably a no-go. IBM shows market makers expecting a $14 move. I'm calculating about an $11 move. We're 250 apart in the spreads. That's just trashy. I could do maybe something similar in IBM around the same highs, around 240. And that's right around that. I mean, I'm calculating what I say I'm calculating. So the market makers show about $15. I'm showing $11. If I take, let me take the average here that it actually shows. The average shows 9.25. So 9.25 times current price puts me up around 20 bucks, almost $21. Well, that puts me up to 245. Oops, and we have all-time highs. All-time highs at 240. Maybe a broken wing to the downside would be better. Maybe the 200 area. Let me see if I can get a broken wing butterfly put slide. So I'll do a long put fly, and I'll pin this thing around 200 bucks. So let me see if that will offer up any premium. Let's move this up on the chain, pin this thing at 200. 3 cents credit. Obviously, that's not exciting. 9 cents credit. That's worse. 205, maybe a little bit more premium. 15 cents credit. Yuck and yuck. 34 cents credit. Okay. This trade, I don't mind this trade. Same thing as Microsoft, probability to profit around 89%, pin price around 205. We'd have to move 20 bucks. Oh man, it's right on that expected move. Son of a gun. Well, here's what I will try to do. I don't mind this trade, but I don't really love it at 33 cents credit, especially when I think this thing could get pinned at 200. So what I'm going to do is try to put this trade in, and I'm going to try to get this trade filled. I'm looking at 750 wide. I'm going to try to get filled for $1. I'll try to get filled for 75 cents. Now this one might have to go like after earnings. Maybe. So what I'd have to see on this one is price would have to drop on earnings, get close to my trade, then I can take the trade for 75 cents credit, give myself a pin price. And this will be a little bit more tricky because I'm going to put this one in good till canceled. And if it doesn't get filled, it doesn't get filled, and this trade will just wash on Friday anyway with no fill. But if price falls on earnings, I'm going to try to trap this beast around a $24, $25 move and kind of pin this thing right around that 200 moving average. And that moving average is 205, and I'm going to try to pin it just a smidge lower at 200. So give myself a little bit of wiggle room there. Okay, so I'll put this one in pending at 75 cents. If IBM has positive earnings, this one just doesn't fill and there's no trade. Right, so I'm going to put this one in pending for 75 cents, and I'll just hang out. So I'll get this one posted, and then I do have to run like right after this post. So this will be IBM, new trade, IBM, 131 expiration. Buy one call at 190 or 202. I'm sorry, these are puts, duh. 202.50 put, and then sell to put at 200. And buy one put at 192.50. Looking for 75 cents credit or higher. Pending order. This trade can fill if IBM price falls towards the daily 200 EMA around 205. This is a pin price at 200, which is just beyond the expected earnings move. If IBM goes sideways or up, this trade will not fill and will auto cancel by Friday. Okay. There we go. And then one picture on old IBM. Just put a box in here looking at that 200. So I'm looking at a pin price right in there. So we're going broken wing butterfly, $200 pin price. But it hasn't filled yet. So I'm just going to let that one marinate. Okay. All right. I can go in the screenshot and posted. So in the stocks options trades, IBM posted, MSFT posted, Meta posted, and Tesla posted. Get yourself some Pulver alerts. All right, everybody. I'm going to wrap it up there. NVIDIA, yeah, what about it? It got its butt kicked yesterday. I think it's an overreaction, so I'm still in it. What I did on NVIDIA was I did take some profit on so I had a collar trade on here. I did take some profit. I'm still sitting with a ratio spread. I think NVIDIA has all the potential in the world to find support and then come back. I don't think it's a terrible trade to go and consider, like, okay, even a debit spread to the upside right now for the next 30 to 60 days is probably okay. I mean, it's just an income trade. If it goes lower, goes lower. Let's see if by the end of March, let's see what NVIDIA can do. NVIDIA, we have earnings on NVIDIA, I think in March, end of February. Okay. Most likely their earnings is going to be pretty solid. So if I went post earnings, I think we can fill this gap. So let me look at something post earnings. We can go out to like the 28th of February. So I'll go post earnings and see, like, current price is 120. If I do like a 121, I pay 45 cents to make 55 cents. I mean, that's a bad trade. I'll take that trade there for, risk 100 to make 100. If I want to go one strike higher or try to give myself a little bit more profit potential, I risk 95 to make $1.05. I'm sorry, I risk 90 cents. Hang on a second. Yeah, I was going to say risk 95 to make $1.05. If I go a little bit more favorable, I risk $1.30 to make $1.60. Like, I'm just getting a slight move to the upside if I get that trade. Now, obviously this is like kind of calling the bottom here, but it's a debit spread. So anyway, if I like to trade NVIDIA, I'll post it. I got to go. I got a webinar right now, so I do have to jump. But look, if you're in the Pulver alerts, look for it to get posted. I don't mind the trade. I think we can have a gap fill in the next, post earnings or even through like March, April. I'll take a couple stabs at NVIDIA. So look for that to get posted soon, but I'm going to bounce. All right. Thanks, team. I'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.